The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good morning, everybody. I'm Tommy O'Brien coming to you live from TFNN 9:06 a.m. We have 24 minutes to go until the start of trading, and we have markets in negative territory, extending some of the losses we had yesterday following a pretty hawkish Fed statement. Chairman Powell will go over what they had to say in terms of inflationary expectations, the dot plot, etc. But nonetheless, we got markets in negative territory. All things considered, you still have the S&P 56 points away from all-time highs, folks, made just 2 days ago. To put some context on the negative action that we got yesterday, we're trading down 11 points right now in the S&P at 4202. Zooming in, this is a daily chart I got up here right now. Now, you got to go back to basically a price point. We're talking about April 29th. So consolidating for about a month and a half, but you take a look at the S&Ps in terms of where we are on a daily basis. I've had this trend line on my chart for some considerable period of time, and you see where we are, just basically bumping up near the lower boundary line of that channel line. Now, what's interesting here is you see this begins with the run we had November 1st, okay? We accelerate. That's when we get the efficacy of the vaccines. Volatility having to do with the election is sucked out of the markets. Stimulus is coming. We accelerate higher. You go from a price point of 32. What's the low? 32.25. We're now almost about $1,000 points over that price level. Quite an extension. What I was going to talk about is if you back this up and just put it on a 3-year weekly so that you can get a full, even, we'll put it on a 5-year daily so we can see the full COVID on this chart. And then what I wanted to show real quick is that if you extend these to the left side of this, we're not too far off in terms of this trend line. Yeah, we got above it a couple times, but if you're working with any type of linear regression, that line might line up exactly where you are. Sometimes you're going to be above it, sometimes you're going to be below it, etc. Nonetheless, you see where we are. Interesting that you're talking about basically correlating to this trend from the lows that we made in March, the S&P, and we're just bumping up against the bottom line of that. You're looking at a price point in the S&Ps. We got down to a low of 41.83. I mean, if you're touching this trend line, you're talking about within 10 S&P points to that level. We'll see if it holds, though, as we have some big action in the markets yesterday, jumping to a 15-minute basis of the S&Ps. The market sells off, and we're basically sitting right at that sell-off level, right? You got below it overnight to 41.83. The market did rebound during the press conference yesterday, up to a price of 42.27. But we've just been chopping around basically at the lows of yesterday's action. You did accelerate to a low overnight of 41.83. But all things considered, you're chopping around between about 41.90 and call it 4,200 and change. And we're sitting at 42.02 with about 21 minutes to go until the opening bell. All right, what else we get this morning? So weekly jobless claims rise to 412,000. All right, expectation was about 360,000. First time it's risen since April is the headline there. You see it on the chart. Okay, in terms of where we were, the numbers, it's still a declining level, but not exactly what you want to see in terms of a rise. 412,000, bigger than the number that they were expecting, 360,000. Getting into the Fed. Okay, the dot plot. Pretty interesting action in terms of the dot plot to think about where we go. We're used to 0%, folks, across the board. That just can't happen when we have the type of inflationary numbers we have. Talking about the dot plot to begin things, you see where we are in 2021, right? You got all the dots lined up at a price point of basically 0 to 0.25%, they call it. It's basically 0%, 0 to 0.25%. And Fed board, as in the dot plots of the governors, basically expecting 2 rate hikes somewhere in the neighborhood of there, at least by 2023, 2 years from now. But what's really interesting is that how much they vary. I mean, look at where some of these plots are. You got 2 governors sitting at a price point between 1.5 and 1.75. That would be a point and a half, a full point and a half rising by 2023. All the way down to you still have 5 governors saying that they're not even going to budge by 2023. But really interesting when you look at longer term in terms of the numbers a little bit further, really accelerating to a price point of almost 2.5% from basically 0% right now. Now, getting into more of the numbers, I'm going to back this out a bit. to unzoom. I just had that in there. Going over their projections. Now, the Fed is going to be slow. I mean, you saw in there, if you saw, but Chairman Powell was talking about, we don't have the data, basically, he was saying, just yet to make such bold claims of, we have to taper, we know inflation's coming. But the change they did make is pretty dramatic in terms of marked up its inflation forecasts through the end of 2023. So officials upped it to 3.4% in 2021. Folks, that's this year, compared to a March projection of 2.4%. Okay, so the last time we got this projection, it was 2.4% for this current year. Now they're saying they're at least acknowledging they think it's going to be 3.4%. And that is a substantial rise, folks, of a full percentage increase in the expectation of inflation. That will play into things in terms of how Chairman Powell is probably processing in his head how he needs to react to a market that the inflation expectations just jumped by a full percentage point in 2021. I mean, I think there was just no denying the numbers that were coming out, the rapid type of numbers that we had. Consumer price pressures have proven hotter than expected over the last 2 months. Labor Department figures, 0.8% jump in April for prices, 0.6% rise in May, marking the two biggest monthly increases since 2009. So those two combined are 1.4% alone, okay, that they got in terms of April and May, back-to-back months, 1.4% over a period of 60 days. Think about that, folks, 1.4% over a period of 60 days coming into the CPI. So they kind of had to make that adjustment, okay? They didn't have to, and it kind of hit the market, I guess, but it should be somewhat expected at this point. Now, what I want to bring up is that the 2022 forecast only rose 2.1% from 2%, and the 2023 number barely rising as well, 2.2% to 2.1. So there is the chairman hanging on to the argument that it's transitory, folks, okay? So he's saying, yes, in 2021, you know what? We got to up the expectations. We have to. We can't deny it. We have to up the expectations for inflation. We're going to up it a full percentage point at this time. It's only June. They can still up it further if they have to and they get that data. They said, but next year, marginal. You're talking about 0.1% difference in next year's forecast versus their prior forecast. That alone is them saying it's transitory. We'll see if that plays out. I don't anticipate that if we get these types of rises in 2021, that it's going to pull back to basically 2%. Now, they're not going to be worried about 2.1% next year. They're not, because we're still going to be making up jobs next year, folks. We got 8 million jobs to make up. It is June 17th. My expectation is those jobs, unfortunately, are not going to be made up by the end of the year. That means Chairman Powell is going to be trying to make them up with stimulus, right? Full employment is his mandate. But I struggle to see a 2.1% number for the entire fiscal year of 2022 with the numbers that we're seeing right now. But I think that's Chairman Powell saying, hey, we can't make that estimate yet for next year because there are factors in play like the used car market, et cetera. We've all heard the type of influences certain segments of the pricing data is having on things like the CPI. But just because they're waiting for that number, as traders in the market, folks, you can have a bias. All right, Chairman Powell is saying it's not his ability to just have a bias that the data is not indicating. They're going to try and wait for that data. And that's, I think, why they have a tame forecast in 2022. But I do not agree with that one. Stay tuned, folks. We got the S&Ps at 4204. We'll be right back in 3 minutes.
Golden ratios give shape to everything in our world, represented in the Fibonacci sequence. These special numbers define the patterns that make up our universe. Not even markets can escape the omnipotence of these ratios. Larry Pesavento is a 45-year market veteran who has published nearly a dozen books on the powerful patterns we find in nature and their relationships with the ever-elusive markets. Larry's newsletter, Fibonacci 24/7, will teach you to harness the power of these natural golden ratios in order to create successful trades. Fibonacci 24/7 is designed to teach the tools you need to identify and act on these undeniable and reoccurring patterns. Sign up for Larry's newsletter, Fibonacci 24/7, and you will also receive free access to his trading webinar, Trading Strong Trending Markets. Try out Larry's newsletter risk-free. All of TFNN's newsletters come with a 30-day money-back guarantee. TFNN, educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
Welcome back, folks. We got the S&P is negative by 8 points right now at 42.04, climbing up to the highs we had pre-market, talking about a price point about 42.06, made it about 7:30 this morning. Let's jump over to our man, Kevin Hinks. Every trading day, folks, fast market at 11 o'clock a.m. Eastern time. Kevin Hinks, Alex Coffey, the team of the TD Ameritrade Network, fast market. They break down what's going on in the markets, break down hypothetical option trades, walk you through how to manage those trades. Kevin Hinks, we got a Fed that thinks next year, maybe 2.1% inflation. Year after that, maybe 2.1, somewhere in that area. What do you got to say about this inflation we're talking about, Kevin?
You know, from a trading perspective, Tommy, when someone starts talking about 2022 and 2023, all I think of is that I don't even buy green bananas. And you want to talk about next year? I'm worried about the next 5 minutes, the next 5 days, and the next 5 weeks. And I think personally, this rise in the U.S. dollar is really affecting commodities, as you can see what's going on in gold this morning. Ooh. Gold's getting slaughtered. But I think this gives a clear path to stocks. And you're already seeing E-minis are almost unchanged. The Dow futures, almost unchanged. So I think this gives a clear path to stocks as we get done, with a really good second quarter or first quarter earnings season, and we're about to get a really, really strong second quarter earnings season starting here in about a month, Tommy.
Yeah, you got to love, Chairman Powell, so they upped the inflationary number to 3.4% for this calendar year, Kevin. I was just going over some of the, CPI, the inflationary data that we got in the months of April and May, that there was kind of no denying from Chairman Powell. But I would agree. He's saying, hey, he can't make that type of expectation for the next 2 years because of the transitory factors that we talk about. And I think whether he's worried about inflation the next couple of years or not, he doesn't have that data, just like you talk about, to talk about what's going to happen in 1 to 2 years when there's so much at bay of volatility. And so, we're going to see what happens. But I imagine the market, like you talk about, man, 42.05, they realize in my opinion, Kevin, I think that they realize that he's going to wait for all of those numbers to come at that time. In no way is he going to start planning for a year or two down the road when you can't make that analysis without making a pretty defined leap in your own head. And you might be right, but that's a leap that the Fed chairman or chairwoman probably is not going to make at this time.
I'll tell you right now, Tommy, and I said this yesterday on the TD Ameritrade Network, and then about 20 minutes later, Jerome Powell said it. The least effective measurement of any type of inflation or any look at the U.S. economy is the dot plot. I wouldn't even pay attention to what the dot plot says. Why? Because there's no way that these guys can anticipate where this market's going to be in 1 year or 2 years. No chance. So Jerome Powell dismissed the dot plots. I dismissed the dot plots earlier in the day on TD Ameritrade. So, no one should have a concern about what the dot plots say. It's the data as it comes out and the trend that forms from that data. That's what Jerome Powell will watch, nothing else.
I completely agree, man. And that's why I think it's going to, I don't want to say give him cover because I think he's doing a great job. But that's why he doesn't have to address what's going to happen in 2022 or 2023 because there's no way you have that data, right? There's just no possible way, man, with everything going on. And, talk about a time like we've never lived before to make kind of that analysis.
And I'll make another statement, Tommy, that measures my career in this business from the early 80s. Jerome Powell, best Fed chair in my adult career. Without a doubt, the steadiest hand on this market.
I would listen, and I don't have any type of history that you got, man, but I'll tell you that watching it, I'm confident that he's doing a great job right now. That's my own opinion. You know what I mean? But yeah, he's waiting for the data. He's not going to do anything crazy, and you don't want the Fed chair right now doing anything crazy, making leaps that maybe some traders would leap and make in terms of analysis. But he's got to wait for the data, and that's why they're not right. Moving the inflationary numbers.
And Tommy, he is a steady counting force on this overall market, and that is unmeasurable in terms of what that does to the overall market. Just look at the VIX. I mean, I think the VIX could be a really interesting watch for the next 2 to 9 days. Let's see what happens to the VIX here. It's 18. It's about 2 points, almost 3 points now higher than it was. We'll see how that works out over the next week or so.
And the market measured it a little bit yesterday when he started talking at 2:30 because the S&P's traded up a solid 40 points by the time he was done there at about 3:15, man. Agreed. So with everything going on, Kevin, as you mentioned, commodity prices, my goodness, right? Gold down $77 basically since about 2 o'clock yesterday afternoon. You got the dollar index trading 91.78. You're up 65 basis points over there. What are you guys going to be talking about on the program coming up today, Kevin?
Real good show for you today, focusing on earnings in Adobe after the bell today. So we'll look at Adobe. Adobe touches a lot of people's lives, as you know. So a lot of the show will focus on, Lightfolio doing a presentation on Adobe.
Folks, if you haven't checked it out, check out the Fast Market program at 11 o'clock. Kevin Hinks, Alex Coffey, and the team. I'm pulling up the Analyze tab, Kevin. We got a $15.62 move for a $543 stock. My goodness, man, this thing, putting it all the way back to COVID. You were at almost $250, folks, and that is, what did we just make, all-time highs on this? I think we did a couple days ago to 561.36 for Adobe. Well, Kevin, we appreciate the education and the conversation as always, man, and we look forward to the program coming up at 11 o'clock today.
Thanks for having me on, Tommy. Have a great day.
You too, Kevin. Take care, man. Folks, tune in, 11 o'clock. Outstanding program. You heard it there, talking about dot plots in terms of Kevin's history, what they talk about. Outstanding program to check out, especially at a time that we just have so much going on in the markets, folks. You heard the conversation there, right? Whether we're talking about the Fed and how they move, which is such a big factor right now. Now, I'm going to jump right back to what we were talking about, okay, which is the inflationary data and the type of jobs they have. So the Fed bumps things up to 3.4% in 2021 compared to 2.4%, as I talked about. They leave 2022 basically unchanged, all right? Yeah, they bumped it up the smallest margin possible, right, by 0.1%. Look at the number in terms of the inflationary data that they're dealing with, okay? Their target is still 2%. Don't forget that. Their target's 2%. They're just willing to give themselves a lot more wiggle room. Well, how much wiggle room are we talking about when you look at this chart going back to 2009, 2008? I mean, inflation, overall inflation, highest since 2008, core prices up most since 1992. And look at the jobs. We're not even close to where we were going to be. And that's after today we get weekly jobless claims back above 400,000. All right, a rise for the first time. More people in the last week filed an initial jobless claims than had the previous week. I thought the economy was supposed to turn that key and everybody comes back. All right, this is going to be a battle in terms of these inflationary numbers as the Fed tries to boost this number to the tune of 7.6 million. And folks, that's 7.6 million going back to the pre-roll, the payrolls for the pre-pandemic level. Well, we're 16 months after that level. You should have normal job creation over that time to reach a level of full employment. So you have to add the 7.6 plus 16 months of job creation over that time. We got substantial jobs to make up, and we already have inflationary numbers that are rocking and rolling. Now, we'll see when some of those core prices come down in terms of the raw materials, used cars, putting the impact in there. Stay tuned, folks. We got the market open coming back in 3 minutes.
Are you having fun trading the markets but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, Butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got markets open and we got the markets rising. We got the Dow actually in positive territory for the session right now. Let's put it back to a 15-minute chart. There you see the acceleration, 33,917 in the Dow. You got the S&Ps. Look at that acceleration as well. You're talking about, folks, we were at 4183. You're talking about 30 points from the overnight lows. You're now positive. You're still negative 1 point on the futures in the S&P at 4212 right now. Jumping back to gold. So gold, technically down $77 on the session. We're trading at 17.84. You see the acceleration yesterday coming into 430. We end that session at about 18.10. Since then, we've given up an additional $35, trading at 17.85. Now, I'm going to put gold back on a year daily. Okay, so we've pulled back. We're at 17.85. We basically pulled back to this consolidation area that you had in gold from, we'll call it April 16th or so. We climbed to that level for the first time. You chop around till about May 5th. Now, it's interesting here. All right, and we know it makes sense in terms of how this moves. But when you take a look at where we are in the dollar, where are we? Where's my dollar? There we go. And this is a 6-month chart I have here on the dollar going back all the way. Let me scroll down to get the axes. There's January 1st on the chart. Here's our recent rise higher in the dollar. Okay, we're up right now at 91.78. You're talking about rising 65 basis points on a daily basis. Now, the point is you back things up, all right? Here is April 16th on that chart on the dollar index. So that entire move that gold has given back could be represented from the action in the dollar. It makes sense, but when you see it on the chart, it makes sense even more, folks, right? You see, we've now, as the dollar rises, gold's pulled back. Dollar has risen from a price point. You're talking about on June 7th, we were under 90. We're now trading at 91.78. It's almost 2 full points in the dollar. That's the dollar index, the basket of currencies. That's the Bloomberg dollar index that we're talking about. And you push this thing back to basically that consolidation from April 16th or so to May 5th. There you see it. Then you trade lower. So basically gold really getting hit on that dollar move. As you're back to 17.84, we're back to this consolidation area. And gold, I had this trend line up there. I was looking at maybe the possibility, an ode to our man Bud Rolfs, former host and newsletter writer at TFNN. Maybe that was going to accelerate out of this channel to the upside and bounce off that channel line. Not exactly what's happened in that gold contract. And if you ever traded to the bottom range of this gold contract, not sure it's going to happen. Whoops, we don't want to do that. We just want to extend it to the right. You're talking about basically 1,600 or even below 1,600, depending how long it takes. But keep your eye on that dollar index as gold really pulling back as you see that dollar index accelerate higher in a big way now within that trend channel line. Talking about gold. And just like that, folks, S&Ps. I mean, look at this. We're talking about only, what is that? 43 points from all-time highs. Less than 1% away from all-time highs made 2 days ago, folks. You think the market is worried about the Fed right now? And great points from Kevin Hinks talking about the dot plot. The Fed chair always trying to downplay the dot plot. But I would keep your eye on the inflationary data that I talked about, because what that says to me is the Fed is only going to address inflationary expectations when they are immediate and almost non-deniable by the data. They're not going to make leaps that these types of inflationary numbers that we're dealing with are going to persist for 2 years, because they just can't make that leap, folks. There's not enough data. We have not lived through, thankfully, these types of economic environments enough times to make a forecast like that. As somebody who is in the Fed chair's role, that should be a somewhat conservative role in the types of assumptions that you are making on data. The fact that they're barely pushing up inflationary data for 2022 and 2023 at a time when they could not deny that they had to increase the inflationary numbers to 3.4% for this year. And even that, right? Even that, addressing that, saying 3.4% is the number they're going to see this year, with all the numbers coming down the line. I mean, just because used cars have a 1/3 impact on CPI data, it still matters on some of that number. Now, it doesn't matter to core maybe as much, but you're still seeing that impact. And I think that's allowing the market to say, hey, you know what? Chairman Powell's not going to make a leap and say, oh boy, these inflation numbers are really worrisome. What happens in 2 years if we're at 3.5%? We better start tapering right now. He's not going to make that. He's not going to make it yet, folks. And I imagine the market has some time, and that's why you're seeing a little bit of a bounce back, as our man Kevin Hinks talked about, in these markets. And it's not stopping, folks. Here we go, 42.17. The number to keep your eye on, you're talking about basically within a stone's throw of where we were prior to the numbers yesterday. 42.27, you're 10 points away from there. You're talking about trading up a price point of 22 S&P points just since 8:15 that we were on the air. And as I mentioned, it's not stopping. You little gold catching a little bit of a bounce. Let's check out notes and bonds in terms of where we are right now. You got the 10-year. Chopping around right near those lows. You're talking about a yield right now in the 10-year of 1.55% approximately. And as we have these markets accelerating higher, what do you think's happening to the VIX, folks? 1732. This market figuring out pretty quickly. But you know what? That was not such a bad deal yesterday in terms of the Fed saying, yeah. These numbers show inflationary data. They're here. We got to address the fact that we haven't gotten, and I keep harping on it, folks, but this is a big one, and I think you're seeing the market react in the same way that I'm talking about here, okay? I'm going to go back to the article again, because 3.4% is not really a big number in 2021 when you factor in that they upped it from 3.4 to 2.4, and just in the last 2 months, April and May, since they made this rise, you showed 1.4%. So take that under consideration. They upped the ante from 2.4 to 3.4, but in the last 2 months alone, Labor Department figures showed a 1.4% rise over the 2 months, marking the two biggest monthly increases since 2019. In that regard, it's a pretty tame upward revision. I think it could have been a lot worse. And then you really factor in the fact that they barely moved the next 2 years. The market's saying they're not going to make a leap too quickly. Now, not to give you both sides, that's the important part that the market's paying attention to, but keep your eye on these numbers, folks, because if we don't make the jobs back and these numbers continue to persist, and Chairman Powell has a hard time rationalizing the transitory nature that he is right now, basically on those numbers, you might see a little bit of worry that those numbers persist into 2022 and 2023 longer term at a time when we're not making up the jobs, and the market might get a little worried if the Fed has to start tapering because they're really worried about inflation before we make up millions of jobs of employment, which would eventually hit the economy. All right? Stocks usually trade off economic activity, not off of how many hundreds of billions of dollars of bonds the Federal Reserve is buying every month. Doesn't mean that's going to happen in the next couple of years, folks. The Fed can be in there for a while if inflation is not a worry, and we'll see how these numbers shake out over the next 3 to 6 months, and that'll be a real determining factor over whether the Fed has to address the fact that these might not be transitory, because they got a 2% target, as we said, and we're way over that number. And how long can we persist over that number and still call it transitory is going to become the conversation as we move forward. All right, what else we got going on? Let's jump around to some of the FANG stocks. We get the NASDAQ 100. Look at that acceleration. Back above 14,000 this morning. We got the Dow up 40 points, pushing 33,946. Russell positive as well across the board. Bitcoin up $265. Jumping around too. Story on Bitcoin. Just should be labeled buyer beware, folks. Watch out for Mark Cuban, too. I don't know what he's doing in terms of being in this crypto. I'm a big fan of the show Shark Tank on CNBC. But sometimes, I don't know, Mr. Cuban. He's had a few tweets or public comments about trading crypto that I don't think were quite the wisest to be putting out for someone that gets his attention. And he was trading a DeFi token, and we'll talk about this a little bit when we get back. But how about this chart, folks? A complete wipeout in one day from $60 to how many tenths of a penny is that? 0.000000057. Stay tuned, folks. Right back in 3 minutes.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have the S&P's up 1 point right now as we speak. A little bit of a pullback from that first acceleration. Dow back in the red, 33,867. We got volatility, folks. Putting it on a 5-minute chart just to see the move we had in the Dow. Look at this drop that we just had. We reached a high of 33,970. Just like that, 100 points gone in the Dow over the span of about 5 minutes. We get the S&P's hanging out to gains up 1 point on the session. All right, jumping around to what else we got going on in the markets. Wanted to talk about, as we mentioned, buyer beware in some of these coins, folks. So this was, I guess, some type of a stable coin or something of that degree. So even in crypto, where huge drawdowns are the norm, a 100% washout in a single day is extremely rare. I imagine they're going to start happening more often, folks. Okay? There's actually no purpose for a lot of these things that are just pieces of code that could theoretically go to zero at any time. How about $60 to zero? This is a DeFi titanium token. 1 day. That's a 1-day exodus. Everybody was taking anything they could to the degree of any pennies on the market to the point of getting to 000, etc. 57. And these are, a stablecoin project. Was part of an algorithmic stablecoin project called Iron Finance. Stablecoins are pretty hot these days. I've heard that term a lot. Some maintain a peg to the dollar by holding a basket of dollar-denominated assets. Whether they actually have those assets that they're claiming back the stablecoin they're talking about, another story all considered. You're dealing with unregulated, completely unregulated industries, folks. You know, this isn't like a brokerage like TD Ameritrade and Thinkorswim where you're regulated and you have to keep those funds in the exact place they're supposed to be. We've all heard the stories, right? Others, like DAI, are backed by an over-collateralized crypto assets, and then there's this breed of so-called algorithmic stablecoins, okay, which use a dual currency structure and attempt to hold the peg by creating arbitrage opportunities between coins. A little bit over my head, which is why I don't dabble in these, because I can't quantify some of the risk in these, and neither can you if they can go from 60 to 0 in basically a day. This crash actually continues a very long line of algorithmic stablecoin projects that have crashed and burned, as nobody seems to have figured out how to nail it. The repeat failure of these projects is a meme. Actually, and what triggered this one? According to Rect News, seen that URL, whatever, but became wildly overpriced. Well, every crypto out there is almost wildly overpriced by that analysis. Then people began selling it. Okay, thanks for the hot take there. So an overpriced cryptocurrency caused people to sell it, triggering a high amount of volatility. Sounds like every coin out there, folks, which is the point I'm making. Overwhelming arbitrage opportunities and causing everyone to run to the door. That's not even an answer. That's just saying that cryptos were overvalued. They sold it. It triggered a sell-off opportunity. And basically, they sold it off till it reached zero. that means it can happen almost across the board, folks. You know, if something goes out of style, nonetheless, but you had Cuban out there going down that rabbit hole, even wrote a blog post about his enthusiasm this Sunday, which included this paragraph where he highlights the Titan token. And this is why, you know, it's like he's got so many followers that are more novice investors to be out there pumping a coin like this that can go from $60 to zero in a heartbeat. Not really something you should be doing. And nothing wrong with being out there and promoting crypto. It's going to be here for the time being. But maybe a little bit of responsibility there. And just to put it out, folks, if you're in that market and you're playing anything like this, even Bitcoin, it's an arbitrary number when you think about Bitcoin, okay? Bitcoin is probably going to be around. That's the big dog. They were the first one, right? But what's the difference between Bitcoin being valued at 38,000 and 20,000 or 10,000 or 5,000? Now, there's only, 21 million coins, whatever it is, okay? So that one at least has that defined supply. But so often in cryptos, even when you talk about like Ethereum or whatever, you're talking about an arbitrary value. Even if it has use, it can still have use at a level far above or far below $38,810. So, you know, we're traders, love volatility. Nothing more volatile right now than crypto. But buyer beware, and if you're in those, I would be using risk capital because you see that, unfortunately, I hope people were just using risk capital in that DeFi token that went from $60 to zero, and it's not going to be the last time, folks. All right, back to equities. Let's talk about what stocks are moving this morning. Unfortunately for CureVac, their vaccine, not effective at all. Some of these numbers that come out, now I say not effective at all, 47% effective in a clinical trial compared to, of course, the numbers that you have from the mRNA-based vaccines like Moderna and Pfizer. Really that we got the vaccine, we got it out, we're getting the vaccine out, I'm fully vaccinated. I was out seeing friends yesterday in beautiful Dunedin in Florida, having a couple of beers, beautiful outside last evening. But that was not a guarantee. And that's why we saw that huge run start in November in the markets, where we're basically 1,000 points above where we were trading at that time in the S&P. The worry was that we would get numbers far below the 90%. I mean, do you remember we were talking about originally that I believe they were talking about that they would not deem the vaccine even usable if it didn't have at least 50% effective level, right? Well, we got like 90 to 95% numbers, staggering in terms of how effective those are. But CureVac really taking a beating with that news this morning. CVAC, I think, is their symbol. Yeah, there you go, down about 50%, giving back half of their value. If you had that stock on margin, you lost it all. All right, you don't want to be playing these stocks on margin, folks. And you're back all the way to where we were in November, folks. Interesting. I wonder if that played into things in terms of you got the vaccine news for the numbers of Pfizer, from Moderna. Market says, hey, guess what? They're probably going to come to the game with the same level. They price it all the way up to 151. You come into yesterday at 100, and just like that, you're back to where you were in November before that entire run up. And this company now, jumping over to the Analyze tab, you scroll it down, you're talking about a company, folks. All right, this is not a small company. Even at these prices, valued at $9 billion. That means that we just gave up $9 billion of equity that was sitting in investors or traders' accounts across there that's no longer in there this morning. Half of that wiped out on that news, unfortunately. So Novavax and BioNTech trading a bit higher, as they're not going to have a competitor, it looks like. BioNTech's COVID vaccine developed with Pfizer already approved, while Novavax reported 90% efficacy in its vaccine, as we're all somewhat aware of at this point, right? What else we got going on? Lennar out with their numbers, $265 a share, beaten $236. Housing market's been on fire. Home builders dealing with higher input costs and a labor shortage. Recurring themes across the market, but the lack of homes for sale in the U.S. helped push prices higher and expand the profit margin significantly over a year earlier. Well, as we know, a year earlier, not really a great comparison, but nonetheless, you're up 2.6% today on their numbers. We've pulled back from 110, but still a healthy number, $93.59. And with that, we get the markets pulling back a bit. We're down 3 points, pretty much unchanged. All things considered, right near all-time highs right now at 4210 in the S&Ps. And as I mentioned, pretty close to that lower boundary line of this upward trend that we've been sitting in basically since the lows of March. You back this up as I started the program off. If you didn't catch the start, you put it on a 5-year, all right? And I'm going to go over this after we come back from this break one more time, because It's a defined trend channel, folks, and it's been in it basically since the lows of March. S&P bumping up against the lower boundary line of that channel line, and we'll see where we go from there. Stay tuned, folks. S&P is negative by 1. We'll be right back in 3 minutes.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Markets can rise and fall like the tides. Subscribe to Basil Chapman's newsletter, The Opening Call, and you too can ride the wave. Basil Chapman is an authority in technical analysis. His Chapman Wave trading system has been helping traders identify trends and capitalize on momentum in the markets since 1984. TFNN invites you to test Basil's proprietary Chapman Wave trading methodology with a monthly subscription to the Opening Call newsletter for only $149. Your subscription to the Opening Call comes with a 30-day money-back guarantee, as well as daily market updates on key indexes, stocks, and commodities. Ride the wave! Sign up for the Opening Call risk-free today.
Introducing Primal Edge.
Today, it's even more important to take a supplement that complements your health. Primal Edge is specifically formulated to boost your immune system and help with weight loss, better sleep, stress reduction, and the need to detox.
Our early ancestors found all their nutritional requirements in the wild environment. But today, our food sources don't contain the vitamins, minerals, and nutrients that we need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated humic and fulvic acids, nature's preferred delivery system. They've been called miracle molecules because, like sunlight, air, and water, without them, life cannot exist.
That's right, Ellen. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge. Just $89 exclusively at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Apologize for that. I had myself muted. NASDAQ 100 up by about 1/3%. You get the S&P is flat right now, jumping back to the NASDAQ 100. So I talked about the S&P. We'll finish up there, actually. The trend channel line that we got going on here, right? You back it up to where we were November 1st. You're talking about 3,200, basically. We're trading at 4,200. Pretty well-defined channel line that we're talking about here. Now, the interesting part of this is you back this up to get a full run of the beginning of COVID here, okay? This is a daily chart. And really well-defined coming off the November lows. But if you just back this down, folks, in terms of extending that to the left, look where it lines up. We've been in this channel line basically since the COVID lows. Now, you could call it a linear regression line. We've risen above it. Sometimes it's a little bit below it. You take that line, though. It's pretty well defined. It's an art, not a science, but I think it matches up pretty well. And we're bumping only to the lower boundary line. Be interesting to see where the S&P trades, but we've gotten that bounce. You got within about 10 points, remarkable, of that lower trend line in the S&P, trading at 42.12. All right, jumping back to NASDAQ 100. We're up 50 points, 14,021, we'll call it. Amazon trading higher today, continuing the run, up 0.4%. Look at Amazon, pushing all-time highs almost at 34.27. And Microsoft, their CEO, he is now chairman of the board. Satya Nadella, Microsoft up about 0.1%. So he is going to take over as chairman after 7 years as the CEO. We all know Microsoft's had an incredible run over that time, but how about 600% Microsoft has done? So what's that push it back to? About 2014. We'll put this thing on a maximum. You back things up to 2014. How about that run? You can't even see. You're talking about basically from about $40 to $257. Microsoft transforming themselves into quite a competitor. Second biggest company in the world, only behind the king dog Apple. And we'll jump over to Apple. Apple today up about 0.25% as well, 130.49. All right, folks, thanks so much for tuning in. Stay tuned. We got our man Basil Chapman coming up next at 10 o'clock. We got Fast Market at 11, Larry Pesavento at noon, Steve Rhodes at 1 o'clock, Dave White at 2 o'clock, Tom O'Brien, my dad, live to wrap things up from 3 till 4. Thanks so much for tuning in, folks. S&P's minus by 3. We got the NASDAQ 100. Tech stocks rocking up 44 points right now. Stay tuned. Basil's coming up live right now.